5. To talk about what this means for mortgage holders or anyone looking to get into the housing market is mortgage broker Angela Calla. Great to see you. Thanks for joining us.
Good morning, Jason. It was a pleasure.
Nice to have you right after this announcement. So how much relief for mortgage holders does this mean?
Well, adjustable rate mortgage holders, they're going to see a $13 payment difference per $100,000. So if you have the average British Columbia $500,000 mortgage, that's $60 worth of relief. Now, Jason, this is a 2.5% decrease from our high back in July of 2023. So they've had a $600 payment benefit to reduce their interest over the last few years.
Those numbers are definitely noteworthy. Let's talk about the smart choice between variable or fixed now going forward. What's your advice for that?
Well, it's certainly leaning more towards an adjustable or variable rate mortgage. Both have their nuances in terms of, as a consumer, if you prefer to have an increase in monthly cash flow, or if you prefer to have a reduction in the overall amortization and length of time of having a mortgage. And what's most important is the discount and the compounding frequency. So you're in a position right now as a Canadian borrower to shop lenders alongside your mortgage professional to ensure that you get the one that aligns best with your overall financial plan.
Do you think this will drive up housing activity in BC?
Well, we've certainly seen an increase, but there is a lot of supply on the market right now. But I think that Canadian first-time home buyers have a significant advantage. Those who are living at home or those who are renting can get into the market very easily. There's lots of opportunities, but also they have the ability to go into this knowing that their payments are going to be reduced. And right now, obtaining a new mortgage means that 30% of your payment goes directly towards your principal. So having the confidence knowing that you're building equity from payment one and that rates are only forecasted to go lower should give Canadians the confidence to move forward with their home purchasing goals.
A reason for optimism. Let's talk inflation, though, rose by 1.9% in August. How does inflation impact mortgage rates?
Well, the Bank of Canada has to walk a very fine line right now to be able to stimulate the economy, support the economy, but watch inflation because they don't want to make the mistake that they made keeping rates too low for too long back in 2021, 2022, 2023. So they're walking very cautiously forward so we don't have any surges moving forward. They've learned from that. And moving forward, you have to ensure that the mortgage strategy that you implement is able to modify with current changes in the market. So they have to balance things accordingly, and they're using that experience wisely.
So having said that, do you think it'll hover around 2.5, no more cuts in the foreseeable future?
I certainly see more cuts coming.
Okay.
Absolutely, with the way the economy is coming, so that's good news. But really, we only have another 2 or 3 cuts available to us before we have to look at things outside of monetary policy and before the Bank of Canada even passes on those cuts to consumers. Because over the last decade, when we've had Bank of Canada interest rate cuts, not all of them are directly passed along to consumers. And banks are really smart with how they modify their strategy because they then change their pricing with discounts or surcharges based on what's happening in the market. But you don't have to navigate that alone. Your mortgage professional is here along your side to help you ensure that you have the lowest cost of borrowing throughout having a mortgage.
Finally, before we let you go, what's your advice for people that are up for renewal?
Start early. Don't be afraid. Don't be afraid that if you start the renewal process now that you won't benefit from rates. Because when you work with an independent mortgage professional, they're pivoting strategy based on whatever best rates are available in the market because they don't have an alliance to any particular lender. So the best way for you to save money is to start early so you can map out the best strategy for your family and know that if there is a better option available, they'll do a full look back prior to renewal to make sure that you have the most money-saving mortgage strategy.
Fantastic advice this morning, Angela. Thanks for joining us again.
Always a pleasure, Jason.